G'day guys, welcome back to Pete's Investing. It's March 11, 2024. This is the US dollar analysis. Now we're currently in a bearish trend overall, although it's hit a key Fibonacci level. So we'll just see if it does bounce from there possibly. And we're going to be using some indicators I've added recently, which are attached in the description, which helps identify tops and bottoms. So what we look at is the three different timelines. We've got the weekly, the daily and the hourly. And you've got a couple of indicators here. We've got the ADX25, and that's bearish on all three timelines. We've also got the CCI 150, which serves a purpose as a trend indicator, but also a divergence indicator. Currently, there's no divergence on this that I can see, at least on the weekly. On the daily, there was a small divergence back there. It's a bit hard to read on this level. I'll explain the divergence on the 1 hour chart, but there was a little divergence there during those peaks, double tops versus higher highs on the price, and the price fell off. Now on the 1 hour chart, let me just zoom into this. We've had a couple of divergences. We had a bullish divergence here. You can see there between those higher lows on the CCI versus lower lows on the price, and they actually bounced, hit our target area, and I've identified all the targets where these divergences have worked with little rectangles. So you can see there's quite a few rectangles and quite a few divergences on the 1 hour time frame. Little bearish divergence there. Now there's been another major bearish divergence there, and that's hit our target there, but this one's fallen a lot further. And these targets are minimum targets, and they could always break a lot further, and this latest one has done that. And the reason I say that is because we originally set a target between that low and that high, and the reason I take it back to that low is the previous range before the divergence started. That's between a 23 and a 38% level. That's where it's hit that target level, but you can see there it's actually fallen through the 61%, which is key area in any chart pattern, and it's actually falling down through the 61%. Now you might say, well, what about the previous low? So if I move that Fibonacci level down to there, so that Fibonacci range, you can see there it's currently resting on the 61%. That's key. Now if it falls much further than that, we're going to see a lot more bearish movement in the US dollar. Otherwise, it could possibly bounce from there. But as I said again, if this CCI 150 drops below this moving average range, then it's a bearish outlook on all time frames. You can see that the weekly and the daily are showing that. And if I zoom out on the monthly as well, that's also broken and still in a bearish mode on the monthly time frame. So as a trading idea, they've got the daily here, and this is just an extension of what I showed you earlier with the weekly and daily. If the daily and the weekly, especially if the monthly, are all below this moving average band, that's a bearish trend we should be following. We don't take any long trades. There was a bearish trend back there as well. Now what I've got here is the hourly chart for the average down approach and the hourly chart for the stop loss approach. So there's two different methods depending on your risk profile and trading strategy. And this is basically just looking at, if I zoom out on one of them, it's basically looking at going long when the Heikin Ashi, I've got Heikin Ashis here on the price chart. When the Heikin Ashi is green, going long, and when the Heikin Ashi is red, go short. That's the micro rule. We've got one, that's the one rule for this trading strategy. The other rule is when the weekly and the daily especially are both below the moving average band like they are here, then you take short trades only. So what I've got here is back test on the short trades. You can see there on the left, it's actually when this period here is broken below the moving averages, take the short trade, and that is the average down approach. We would have averaged down once during that period, and this is a stop loss approach. The average down approach generated 1,305, and the stop loss approach generated 252. Now, also when you do trade this, and I've got the trading rules at the end of the video, just stay tuned for that. When it breaks above this moving average band, you're probably wise to stop the trade if you can catch it on the 1 hour time frame. Otherwise, just let it go on the daily time frame. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.